Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Okay, so another week has gone by and LME 3-month nickel is still suspended. However, just recently there is the glimmer of hope that tomorrow, that is Wednesday, 16th of March 2022 at 0800 London time, the market will reopen. In the meantime, I've kept to the longer term monthly chart, as I did last week, to add some definition. The first thing you should note is where have the bars or candles for the first 2 days of last week gone? Where is the extraordinary action we saw gone? Well, the LME has cancelled those transactions. Hence, those bars or candles no longer exist. However, I'm not so easily minded to remove all traces. Thus, I've kept the previous all-time high on this daily chart, as the label suggests, as a ghost. This also goes for the two 50% Fibonacci lines derived from this high. So, that all being said, this is where we are. What may now technically be next? Well, for starters, I've already spoken extensively on the monthly key reversal down here in September, and then the immediate countering monthly key reversal up in November. I've repeatedly argued that this was the start of the recent move higher. Additionally, I would also point out the 2011 to 2021 reverse head and shoulders pattern and the more recent 2019 to 2022 ascending wedge pattern as further supports for the overall move higher, along with the huge June 2021 to January 2022 diamond pattern that, though not fully visible on this monthly chart, was the base of the move higher. Finally, I can also once again point out the bullish bow tie formation of the 1 year currently at 24,350 moving average, the 2 year moving average currently at 18,720, and the 3 year moving average currently at 17,130. That went in and crossed over, importantly, in the right order back in October 2020, and which led to a break higher 17 sessions after. This is well within the appropriate 15 to 20 session window where you could expect such a move. So if all that, technically being said, it would still not have reasonably led to such excessive moves higher as we have been previously privy to. The ghost peak was at 101,365, just over the compound Gann number at 101,330. The nearest Gann number to the last traded ghost price of 80,000 is obviously the 81,000 number, but we also have one just below at 78,730. Finally, key levels to look out for are the ghost 50% Fibonacci lines for the 2016-2022 move at 54,490 and the 2020 to 2022 move at 56,115, plus the prior all-time high seen back in 2007 at 51,800. I'd also start paying attention to some of the lesser ghost Fibonacci levels, the 38.2% Fibonacci line for both of the previous moves at 43,415 and 45,425 respectively, and the ghost 61.8% Fibonacci lines at 65,565 and 66,805 respectively as well. These numbers may be further finessed once I manage to return to the daily chart. I've also added a new Fibonacci series based on the high managed back on the 7th of March this year. The 50% Fibonacci line here is at 32,925. LME 3-month zinc. Last week, for the same reason as LME 3-month nickel, I chose to take a step back and look at the monthly charts on LME 3-month zinc for my weekly commentary, rather than the usual daily charts, as at the time a better picture could be seen and the context was clearer. I noted two significant patterns, one in operation and one just finished, possibly a third that may have been forming. The two principal patterns were firstly the 2016 to 2020 bullish Andrews pitchfork, with the market at that time moving up over the middle time, currently at 38.69. The next major pattern was the completed 2015 to date bullish halfway hesitation. This had a target in the region of the June 2007 high in the 3850 area, which has obviously been achieved. The final pattern idea is a 2020 to date possible expanding wedge pattern, currently 3324 to 4471. This is in many ways a nascent pattern. Plus, it has been breached on the upside this month, though no closes outside as yet. However, I feel obliged to point it out as a possibility in the coming actions. I noted that the technical origin of the latest moves higher had been the monthly key reversal made in December last year. Even now, I feel this is still worth highlighting, as this recent action is the latest episode in the moves higher seen since. All of that was on the monthly chart, and as you can see, I've transferred them all back now to the updated daily chart. Yes, we are back on the daily chart here once again. So, what have we seen since last week that can easily be identified on the daily chart? Well, the first thing to note is that the huge move higher on Tuesday last week ended up as an indecisive spinning top pattern, closing on the upper time, currently at 42.56, of the breached August to October bullish shift pitch fork. This pitch fork that had shown the bullish angle of attack prior to the big attempt higher. This is why I've still kept this very obviously breached, even broken you could argue, bullish shift pitch fork, rather than retire it. Additionally, the following Wednesday was a bearish long open and close black Mariposa, a very bearish pattern indeed. This action brought prices back within some congestion seen beforehand and since, notably the 50% Fibonacci line of the October 2021 to March 2022 move at 39.53. The middle time currently at 38.69 of the previously mentioned big 2015 to 2020 bullish Andrews pitch fork, and the middle time currently at 37.86 of the more recent breached August to October bullish shift pitch fork. For all these reasons, we can see why the market has last Friday and this past Monday formed some significant indecisive patterns. Below, we now have the combination of the early December 2021 today uptrend, currently at 36.68, and the slowly rising short medium moving average, currently 36.57, plus the interesting heavily optimized May 2020 today uptrend, currently at 35.88, and the rising medium moving average, currently at 34.96. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. And here comes the final bit. Copyright Eddie Tofpik and ADM Investor Services International Limited.